Hey, everybody. Happy Friday Eve, non-farm payroll Eve. How's everybody doing today? Hope all is well and the stream is coming through great. We have a great guest on today that we're going to get to in a moment. Adam Mesh, very, very well known, unbelievably respected in our industry. So really excited for that. I agree with you, Thomas. That opening never gets old. I could listen to that song probably 5-10 times a day and it never get old. So I love it as well. Quick market update. S&P's really been in a very tight range all day. We're up around 23 points or so right now. Earlier this morning, we did see the market kind of back off towards unchanged a little bit, but now we're just kind of resting right in here. And volumes are really, really light today. And Adam and I were actually talking before we got on here, and he was saying that there's not much trade today either. He's not doing much. And I think people are just positioned or repositioning for what could be a big move tomorrow with non-farm payrolls. So got S&P's up about 20 points. The NASDAQ is up about 1/3%, 78 points. The Dow making a nice comeback from yesterday. And that's actually being up, what is about 40 bips right now, about 200 points. Especially with Salesforce. Salesforce being a drag, that's a nice move on the Dow. So, we're seeing a little bit of positivity here. VIX is actually down about 4% today going into NFPs tomorrow. Gold and silver, some of the commodity space off of those record highs a little bit. But overall, honestly, not a lot of trade today. So with that, I want to bring in our special guest today. We're going to go through a little bit of his background here for those of you that don't know him. But Adam Mesh, thank you so much for joining us today. It is really, really a pleasure.
Scott, great to be here with you. Fan of you for years. And besides being excited to be on the show, I just want to bring it to everyone's attention that it is your birthday today. And
really, you had to do that?
I did. Birthdays are a big deal. Birthdays are a big deal.
I appreciate that. Yeah, it's just another trip around the sun. It's all good. Thank you, though, very much.
Enjoy it.
So before we get going here and pick Adam's brain, everybody smash away. Like, subscribe. Let's get some records there today. Thank you, everybody, for the birthday wishes, and thank you, Adam, for the embarrassment. So I appreciate that. No worries. But everybody smash away here. And quick background on Adam, for those of you that may not know who he is. Okay, in our industry, he is really widely recognized. Trader, entrepreneur. And for those of you that might not know this, 20 some odd years ago, Adam was on the Average Joe show. And I don't know how much he's going to go into that, but getting to our trading world here, he's been doing this for 20 some odd years. He is featured in Forbes, CNBC, and the thing that I really respect most from Adam, because we've obviously crossed paths over the years and stuff, is his discipline. And that is something that we always talk about in the rooms here. Learn to take your losses, trade conservatively. Our style, right? We go out there, we're not going out there to hit home runs. If we hit a double, triple, or home run, great, but that is not what our thesis is when we put on a trade. We are as disciplined as they get. We grind out our wins, and that's how you stay in the game, and that's how you make consistent profits. And Adam has a lot of those same ideas, and that's probably one of the reasons why he has been so unbelievably successful over the years as well. So, Adam, you embarrassed me a little bit with the birthday. I just had to put this up here too. Not that there's anything to be embarrassed about. It's actually very, very cool. And that picture, I think, is like from 20 years ago, right? You look the same. You haven't aged a bit.
Yeah, that was from 20 years ago. Yeah, that's crazy.
Yeah, you look the same, which is really awesome. But let's get into it here, guys. And we'll, if we have some time, we'll field some questions as well. But really, there's a couple macro things that I want to touch on. We talked a little bit yesterday about the bond market. What's going on? Is it a tipping point or not? Can the gold rally continue? And what about the jobs number tomorrow? If we get a soft number, what it means. What if we get a really hot number? What does it mean? And then we're definitely going to pick Adam's brain on his favorite trading strategies. So, we talked, like I said, a little bit yesterday about the bond market. It's not just here in the U.S. that we're seeing, some increased volatility and some angst, if you will. It's global. So, Adam, what do you make of that? I mean, I know we're equity traders, we're option traders, but certainly what's happening in the bond market spills over into what we do.
Well, it's interesting with the bond market. I'm reading the book When Genius Fails, and it's about, for those of you who don't know, that long-term capital, right? And what happens is, for the most part, things are predictable most of the time. But when there's a divergence, the bond market's always a little bit more, right, illiquid. So the divergence could be something that spooks the market. But, anytime I try and watch the auctions and try to gain an edge for the next 15 minutes, it doesn't really help me at all. Like, I'm not quick enough to react to the quick trades. And then after that, I'm not smart enough to interpret it. But what are they saying right now with the bond market? What do they think could move the markets in that sense?
So the big divergence right now is, with the Fed expected to cut rates in a couple weeks and whatever that curve may be of cuts moving forward, we're seeing the short end of the curve. And again, we discussed a little bit of this yesterday, guys. Short end of the curve meaning 3 months, 6 months, 9 months, even going out to 2-year duration. The long end is where you see those 20 and 30-year yields. So the short end of the curve is coming down because the Fed is expected to lower rates. But it's that long end of the curve, the 20, the 30-year bonds, which are actually going higher. And they're going higher because of the risk that is, I guess, baked into the marketplace associated with central banks, not just here in the U.S., the Fed, but around the world, that the massive amount of debt that is piling up, that at some point that's going to come home to roost. And maybe those longer term, bonds 20, 30 years down the road aren't as safe as, they have always been. Is that really what's going on? I don't know. We always see these ebbs and flows of the bond market, but this one's definitely notable to watch. And Adam, I don't know what you make of it. That's what I make of it, is that there's definitely some angst and concern further out on the curve you go.
Yeah, I mean, the price action doesn't lie in terms of that.
No, it does not.
And so that's the greatest thing about the market is, it's the action speaks louder than words. I think the Fed announcement, and now there's a 98% chance of a rate cut factored in. So, I mean, for me, where we are with the markets, which have gone up such an extreme amount, now the Fed having kind of tipped its hand that there will be a rate cut in September, it's hard to see where the good news will come from.
Exactly.
On this. Yeah. So what I look at is how much more upside can we have? And by the way, the market's proved me wrong. Every time over the last couple of months, I'm like, how can we blow through our highs again? We do. But again, I'm finding myself in the same position right now. I'm looking at it thinking, sure, we're sitting right below the highs. I don't think we have much more higher to go. I'm not betting against this market because anytime you do, it's wrong. So for me and what we're doing with our trading right now, we're in a really good premium collection mode. Some of the stuff we have collects dividends, but we're doing less because it seems like the risk unknown, right, outweighs the potential reward, which is already all figured out.
Yeah, I kind of agree with that. And I said this yesterday too, and I may be in the minority. I'm not so sure the Fed needs to cut rates yet. We are seeing some weakening data. The NFP or the ADP this morning, weekly data jobs number came in a little bit worse than expected today. So we are seeing weakening there in the labor market. But I'm not so sure that we need the cut. The market wants it. Market is expecting it, as you said. So You can't trade on your own opinion. The market is really going to show you what's going on.
And then you look at gold, you have this up right now.
Yep.
And gold is another, historically, flight to safety. So the fact that gold also is at all-time highs would historically be considered a negative for the market, because that's a risk-off trade by definition. But honestly, I think I hate the word honestly in conversations, because in front of that I wasn't being honest before.
Right, because all the other times you're just spewing garbage.
Yeah, there's nothing to be like. So honesty is the wrong word, but I guess my clearest thought goes to, and I don't know if it's not linear in this sense, but if you ask me what the biggest risk is in anything right now in the market, it is Bitcoin. And the reason why is because now you've seen everyone, for the most part, in the mainstream buy in. I'm not talking about me. I'm talking about BlackRock and all these different funds. And you look at the way MSTR is hedged around Bitcoin, or not even hedged, leveraged around Bitcoin.
For sure.
And, if that's the most capable of having an extreme move. There's no reason why, I don't think it will, but there's no reason why Bitcoin couldn't drop significantly. And that's in the balance of power right now. When you're talking about bonds and you're talking about gold, you're also talking about Bitcoin, right? That's an asset class now.
It is now up there with the rest of them, yes.
And I think it's the most dangerous asset class. It seems safe under the current administration. But that's where I kind of look for, if I ever was looking for a really doomsday scenario, it would be if there was a threat to Bitcoin. That would have a tipping point where a lot of other things would be in trouble from that. But I don't. There's no question happening. But I'm less worried about the bonds than I am about Bitcoin.
Well, I think there's no question about that, because if we do start to see Bitcoin, crypto unravel a lot, you can definitely see that flow into other asset classes, because, as you said, Bitcoin is now a mainstream asset class, whether it's Bitcoin, Ether, whatever it might be. So, I think that is definitely something to watch out for. Now, the crypto bulls out there aren't going to like that, but.
And by the way, I'm not saying that's going to happen. I'm not bearish Bitcoin. I'm just saying what to be on the lookout for. And Scott, I'll tell you this, you and I are traders first and foremost. We grew up trading, and then we got involved in this financial publishing industry where we have subscribers and members and stuff, but we were traders. We were traders first. Yep. And but there's a marketing side that I've learned from this business, which is if I want to go out to somebody else's audience, then you could pay for what's called the dedicated email, where someone would send an email on your behalf to that audience, right? And in the trading world, the cost of that email would be, I don't know, depending on the size of the list, anywhere from $5,000 to $10,000 to reach a sophisticated audience. The amount that crypto companies are paying right now to reach those same audiences are 20x, right? They'll pay six figures to send an email to the right audience. I just spoke to someone who was working with a crypto exchange, or a crypto brand that wanted their brand out there. They didn't even care about new members. They just wanted branding. And they said, here's $2 million budget. And if it's not enough, let us know. The money is play money to them right now. It's they earned it because crypto went up, so it doesn't seem real. So they spend it like it's water. It's like that new breed of money. And we've seen time after time that doesn't last. That doesn't last. And I'm not predicting it, but the way these guys are spending money, the way they don't value money because it came so easily in that crypto world, that's just where I have my eye on the bigger picture.
Yes, this is live, everybody. The dogs are going nuts in the background here. Yes, everybody knows this.
They look like people, though. They look like people.
Yes, when I'm not down doing this on the floor, when you guys hear all of the rowdiness and the trading going on in the background, you can always hear the dogs. So I will shut the door on them right here. But you're right. I mean, there's certainly risk there, and it's kind of one of those things. When you get to, and I'm not saying we're at a top. I agree with Adam. We don't know what's going to happen here, but when you get in one of those situations where you get in an Uber and all of a sudden your Uber driver is talking about that, right? Or you're checking out at the grocery store and someone brings up, oh, how about that Bitcoin? How about this move in gold? Those are the times typically over history. Those are the times typically where you could see a shift in that particular asset class. Again, is that going to happen this time? No clue. Absolutely a great point, something to watch out for. But let's all eyes are on tomorrow morning, right? And then when we get past tomorrow morning, next Monday, it'll be something else. But for right now, all eyes are on tomorrow morning and the significance that NFP's non-farm payrolls may have to Jerome Powell and the Fed. So as you just mentioned a couple minutes ago, market is pricing in, and this is with the CME Fed Watch tool, 98% probability that the Fed is going to cut in September. I personally don't think that changes tomorrow, even if we see a stronger than expected report tomorrow, which a stronger than expected report, meaning more jobs, right? That might put pressure on the Fed not to cut. I think the September one is a lock, but I think that the number we get tomorrow is going to shift the curve down the road a little bit, October, December, going into next year about how many potential cuts. Adam, what do you think?
I think that, right, that would be a bad scenario, right? It won't even impact this cut. It will impact down the road. And then how many more times will that change? So I think that the good news is factored in. I think that there's more risk to the downside into an announcement like that because we already have the rate cut baked in. But I'm not expecting much of a move, especially based off the action we're seeing right now. The market's just stuck.
Yeah, I mean, I'm looking right here. S&Ps for tomorrow are pricing in about, this is live right now, I mean, $4.5 move in the SPY. That's nothing. That is really nothing going into a big report on this. So I agree with you. I think this.
By the way, whatever we get, you'll probably see half of it go the other way within the first 30 minutes of the open. Big
for
open,
sure.
Yeah,
for sure. I do think there is more of a concern though for the overall economy because we are seeing a slowing jobs market, as was kind of shown this morning with the weekly numbers, with ADP. And I know from my experience, my own personal experience of my adult children, their friends, and that whole world, it is definitely difficult to find a job out there. So I think that is cause for some concern. And whether, a reduction in rates affects that or not, I do think there is some concern there for the overall economy.
Yeah, I mean, I think it's just when we talk about the potential of the market going down, that the thing we hear all the time is that the market takes the stairs up and the elevator down.
For sure.
And it's so hard to time that down move. So when you set yourself up with your trades, you want to put them on in a way where you have downside protection, but trying to time that down move. Anytime I try to do it, the note's gone, but I had a note sitting here for 2 years that just said, "Don't short the market ever." And I didn't listen to it, but it was just like one last ditch reminder to to try not to do that, because when you try to time it, it just doesn't.
Oh, timing that is awful. But that being said, and one thing that we do in our rooms, and I preach to my students all the time, is when you have the opportunity, buy when you can, not when you have to. When vol is low, when premium levels are low, buy some of that protection. Stay in the market long, if you want to be in those long positions, but have that protection. And as a trader, and this too, you want to do this when you can. You want to buy that insurance before the house is on fire, right? And if it winds up being useless, great. That's what insurance is for. You hope you never have to use it. Now, before we go into some of Adam's trading strategies Adam, this is something we do every day here. We get a word of the day, and usually there will be a comic figure or something presenting the word of the day. Today it's these three pups. Those are the ones you guys all heard barking just a couple minutes ago. Today's word of the day is mesh. So anybody that's out there, if you look in the chat, people are writing that in there. They're going to go into a spin the wheel contest at the end of our chat today. And whoever the winner is wins some swag. So we do that every day here. And today's word is mesh. I couldn't think of anything better for today.
Thanks, Scott. And there's nothing like some good swag. I love good swag. So, yeah, that's great.
Yeah, something like this. Or, I mean, I like that Ryder Cup hat you're wearing. That's pretty good, too. But let's talk a little bit about your go-tos. You're such an accomplished options trader. And I know that just like me, we take what the market gives us, right? We can have as much of a plan, as much of a roadmap as we want, but the market is always changing, right? It's the ebb and flow of the market. So as professionals, we need to be adaptable. We need to be able to change our strategy at a moment's notice, or if we see a trend shifting. So what are some of your go-tos and kind of the ways that you like to trade? I guess either in a market where it's kind of slower or, in a market when we're seeing VIX 25, 30, 35, which doesn't happen all that often.
So I feel like I'm in the best place I've ever been trading in terms of the portfolio I run, because we're flexible to what the market dictates versus like before in my past, like when I had it set up, it was like you only were doing a specific strategy. So like if I had just a call and put buying strategy and the market wasn't providing good opportunities there would either be bad performance or a lack of trade flow. Usually a lack of trade flow because I wasn't going to sacrifice performance just to put trades out there.
Where have you guys heard that before? Yeah. And no, Adam and I did not discuss that. That was not like a buzzword or a buzz phrase before this.
Right. No, it's, there's trade pressure when people sign up. They're like, we want more trades. And you get back from your team. And they're like, hey, people are asking if you're putting on more trades. And I would have times where I'm like, I don't like anything. Like, what do you want me to do? But now I at least have a service on where we have positions that we're able to update and roll. So, the nicest thing is if there's something we really like, then we'll probably go out and buy like a long-term call. At this point, we're into next year, 2026 January calls, and then we'll sell a call against it in the near term. So we just did that in APLD a couple weeks ago as an example of a trade. We like this stock. We thought it had a chance to make a move to 20. We bought the 14 calls when it was trading at like 13 or 14, right around at the money, going out. What month are we in now? We're in September.
Now, yeah.
We're going out like 6 months, like a long time. And then we sold the 18 for September. And APLD,
so you put on a longer term diagonal spread.
Yeah. Yep. And so we got a quick move up in APLD. We took off a third for a nice profit. And now it's come back down, but the 18 strike we sold is coming down faster because it expires in a couple weeks and it's further away, and then we'll collect more credit. And that's like
roll out.
We've done that with Uber, and Uber we got so far ahead that we sold our 75 calls and flipped it to 90 to take half the risk off the table too. So we love doing those diagonal trades. It's great. Sometimes when we get a good trade like that and it works and we're like, oh, we wish we did more, then maybe what we'll do is we'll come in, we'll put a credit spread underneath saying, oh, we should have done more. So if it comes, we'll collect more premium because we don't think this is coming back down. So if we feel like we're a little late to the trade, we'll usually come in underneath it. If we feel like we're on time, we'll put on that longer dated trade. If we feel like it's imminent, that's when we'll buy calls. Like if we feel like our timing's really good. And we only buy calls now pretty much if we're in a good rhythm from strength. Like if our portfolio is working, the income's coming in, we're growing each week, we feel really good, we could take a shot with some of our profits on something we like. We won't do it if we're getting hit. Because if we're getting hit, we're insulated. We don't want to expand. So when we know we're going well, we're good. So we just had a bunch of good trades in a row where we put stuff on and then just quick option trades. And then the last one we did, we missed. We ended up only taking a partial loss, but it was Wolf, WULF. Looked really good. We bought like the weeklies for the following week, and we had a chance to sell for a profit. We didn't, and we ended up losing like a couple $100. Nothing big. But then for that, it was like, okay, that was our first miss. We're not going to chase calls right now. We're going to go back to our premium collection mode, insulate, rebuild. And you know what? It was the right decision. Anything else we would have bought calls on since then would have been wrong. So now we're building back up. Like what we did today was we had Resolve, RZLV. It's part of the Russell. It's a cheap stock, but we've been collecting. It gives you good premium. So we had sold the 250s. That there was nothing left. That went all the way away. So then we sold the 350s. It went above 4. So we just made 60% on those options in a week.
What's the ticker, Adam?
RZLV.
RZ, got it.
It got added to the Russell. So it's a great way. But like, you know, it's up today. But like what we like about it is we were able to sell the 350 calls for 40 cents when it's trading at 370, which is a lot for that kind of stock. So the premiums didn't make sense, and we just able to keep collecting that. SoFi we've been in for a while, which is good. RR, Rich Tech Robotics, which now has options. We were in at 250. We sold a third of our position when it ran up to 360 last week. So really good rhythm. You know, one of the most interesting plays as we talk about Bitcoin is BITO. So BITO is something we've done really well with in the sense that we've done everything on this. So BITO pays around a 70% monthly dividend, and that wasn't enough for us. We like a 70% dividend, but just to go even more extreme, we would sell puts to get into the position. So we're collecting.
Yep.
And then once we got it, and we would sell puts right before it goes ex-dividend to make sure we get the dividend.
Which the next one is not until looks like September 2nd or December 2nd. So there must have been one a couple days ago.
No, it's every month. It will be October.
Oh, it's every month. Okay,
yeah.
Got it.
So yeah, there was just one September 2nd. So the dividends are around 70%. The last one was even more because it was $1.20. But so we'll sell a put like a week before it goes ex-dividend just to collect an extra 15, 30 cents. Then we collect it anywhere from 70 to $1.20. And then we also have a call going out after the dividend's paid for a third collection. So we're collecting it almost 100%, over 100% a month. So that's been working really well. It's really fun, which works as long as Bitcoin stays in a $70,000 to $120,000 range. It will not work if Bitcoin falls apart. So for anyone worried that I was saying Bitcoin's the biggest risk, I don't think it's going anywhere under the Trump administration. They're a fan. They want to protect it. So I like this trade for the next 3 years.
That's a hell of a dividend. That is an incredible dividend. If anybody wants to look into that, ticker symbol on that is BITO. And I'm looking at the option markets off here on the side, and it is really liquid. There's a lot of volume out there. So definitely something for people to look into. All right, we're going to be wrapping this up here. I know this goes so quickly. We could probably sit here and talk for another hour, and it would be really easy. But Adam, I'm gonna let you give us like kind of a little drum roll before I spin the wheel here, and we'll see who the swag winner of the day is.
So yeah, I'll do the drum roll, but I'll also tell you before you do it that I love a good audience, and I like the way your audience is really engaged and chatting in. And for me, whenever I am a guest somewhere, I could kind of judge someone by their audience. And the fact that they're really engaged is great. You've done a great job trading with them every week, bringing them into your universe. And I like to see that. It makes me happy. And you have a lot of good stuff going on in your life right now. I want to congratulate you on that. And I enjoyed the time with you. And with that said, good luck to whoever's going to win the swag.
Yeah, let's get at it. And thank you for all of that. All right, let's get at it, everybody. Don't get dizzy watching this one. This is a very full wheel here today. All right, Michael, Nico, Paul, who is the winner? It looks like Nico.
There we go.
Meek, capital O. Are you in the house? Because you do have to be in the house to win. So, oh, look at that, Adam. Ruben says you are a star. And he's not talking about average Joe, I don't think.
Thank you. Thank you, sir.
That is awesome. Nico, are you here? Give us a quick shout out in the chat if you are here, so we know that we can send you out some swag. Otherwise, we're going to have to do this again. We're going to have to just spin the wheel again. There we go, Nico. Wonderful. Wonderful. All right. Here's what I need you to do, Nico, is you to send me an email. There it is on the screen right now. Shoot me an email with your size swag and a mailing address, prosperswag@prospertrading.com. Listen, everybody, I really appreciate all of you joining in today. Adam, I can't tell you how much I thank you and appreciate you. You are one of the good ones out there, right? There's a lot of people in our business, right, that people look at as guru, my you know what. I don't want to listen to him and blah 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 blah. I will let everybody know Adam is one of the good ones, guys. So if you want to pick up watching, listening, having Adam Mesh guide you, it's got my 1000% full endorsement. So thank you very much, sir. Thank you guys, everybody. Happy Friday Eve. We'll see the NFPs tomorrow, and I will see everybody tomorrow as well. Thanks again.
Thanks, Scott.